Good evening. Welcome to the revision classes. We are today going to take up the statutory updates applicable to this paper 5, which is indirect taxes. We are dealing with the January 26 attempt, right? Now, what is important to be noted here is that the provision of the Act, both as amended by Finance Act 24, is applicable. Finance Act 25 is not applicable, though it is as on date notified. But I'm sure you all would be knowing it is notified with effect from 1st of October. And since the rule of institute is that all amendments within 6 months of your exam are only applicable, hence Finance Act 25 amendments will not apply to you. Okay, Leela, I'll answer your question in a while. What's your first name? Subhashini is your first name or Leela is your first name, beta? How should I address you? Okay, great. Yes, very good evening, Leela. So, amendments only in last 6 months are applicable. So amendments up to 30th of June 25 will apply, not beyond that. Correct? So amendments of Finance Act 24 plus all amendments by previous Finance Act 23, which have become effective up to 30th of June shall apply. It may have noted that amendments made by 23 in 9, 9A, 9C of Customs Tariff Act, 65 of Customs Act, and insertion of new 65 in Customs Act have not become effective and thus are not applicable for our exams. Further amendment made by Finance Act 19, these amendments and the insertion of new section this have not become effective, so they are also not applicable. Next, the first part, GST of the October edition is based on the provisions of GST as amended by Finance Act 224, including the significant notification circulars issued and other legislative amendments made, which have become effective up to 31st October 24. So in this study, in this statutory updates, we'll be covering amendments from 1st of November 24 till 30th of June 25. So when you are referring the October edition of our notes, you have to include this amendment so that it becomes fully applicable to your exams. As all the amendments made by Finance Act 24 number 2 has been at the end of the relevant chapters have become effective, students are advised to refer the same for this January attempt. The contents in part 2, that is customs and FTP, is based on customs law amended by Finance Act 24, including notification circulars up to 31st of October 24. So from 1st November to 30th of June is what is covered in this update. Fine, students. So I hope this is clear to start with. Now, before I proceed, let me answer Leela's question. She has answered, what is the assessable value in case of high sea sales? Very good question. So let us take for an example. You have imported goods. Your goods are still in transit. They are in the high seas. I approach you. I want to buy certain goods. You say, yes, it is on the way. I say, no problem. You sell it to me now. I'll go and get the clearance done. Now, this particular case, you had imported for, let us say, $1 lakh. You have sold me for $1,10,000. So in this case, when I will clear the goods, the assessable value will be taken basis this 1,10,000. Now let us say before the goods reach India, Manishji has further purchased it from me and I have sold it to him for 120. In this case, the last sale price. So if there are multiple high sea sales, the last sale price, that is in this example 120, shall be the basis for determining assessable value. Now I'm using the word basis because in that you have to make certain additions as required in Rule 10 of the customs valuation rules for all different costs like freight, insurance, etc. But the basis would be the last sale price. Yes, Leela, you have any further questions in this? See, when you're asking, is bill of entry value the basis? Understand one thing. Answer will be yes. Why? Because in this case, who will be filing bill of entry? You are the first or the original importer, but you're not filing bill of entry. You have sold goods to me, I'll be filing. If I further sold it to Manishji, he will be filing. Now, when he is filing, as per the law, he knows that the value to be taken is this value, that is the price at which I have sold it to him, which is 1.2 in my example. So he will be filing the bill of entry with 1.2 lakhs. So you are correct. Whether the bill of entry value will be the basis, answer is yes, because who will be filing the bill of entry? The last buyer. If the last buyer is filing the bill of entry, I'm sure in the bill of entry, the value which the buyer will report will be his purchase price. Yes, correct. Correct, Beda. You're right. So see, you purchased for one, you sold it to me for 1.2. I sold it to Manishji for 1.3. The law says you take last of the values if there are multiple high C sales. So if his purchase value at which I have sold it to him is 1.3, so 1.3 will be the value. You want to unmute and talk, you can unmute and speak. That will be, I think, much better. So we can have a one-to-one straightforward discussion. Yes, Leela? Yes, but you can ask. We can discuss directly. I'm not able to hear anything. If you're saying something, I'm not able to hear. Okay, but fine. So let us go to the amendments. Now, first amendment is relating to applicability of GST on penal charges. So my first question to you, Leela, is that do you know anything about GST on penalty or penal charges? Let us first have some interaction on this. Okay, so just give me some brief so that I'll know to what extent you have understood, so that accordingly I'll either start with the basic or I'll directly point out this particular amendment. Yes, let me know what you know about GST on penal charges or penalty. Yes, beta. Nee, that is correct. Penalty for breach of law. My question is, what is GST applicability on that penalty? Yes, Leela. Okay, fine. I'll start with basic first. See, this is a circular which is issued now, but on similar issue, we already have a circular number 178 issued in the year 2022. So let me first give you a whole backdrop so that that is also revised and also this point is added to that. So basically, the issue is about, now you'll find that many times in different scenarios, in different contracts, if one of the parties is doing breach of contract, the other party is entitled to recover damages or penal charges. So I'll give you a simple example. So let us say I have given you a contract whereby under the contract you are supposed to come and construct a particular structure at my place, and the contract value decided for this is 50 lakhs. However, this also has a clause that in case if you commit any default, if the quality is not correct, if it is not completed in time, I will impose some penalty. And let us say you completed it late. So I impose a penalty of 5 lakhs. So in this particular case, while making payment, I deducted 5 lakhs and made payment of 45 lakhs. It could have been the other way around, that I would have committed some breach because of which you would have levied penalty on me. And besides your 50 lakhs contract value, you have taken extra 7 lakhs. So either ways, any of the parties can levy penalty, whoever is the suffering party. Now, the question was that when in the course of any contract, if any penalty arises, whether that penalty is a supply and whether it will be attracting any GST. Now, in this regard, when you go to the schedule, very good, madam. So when you go to the schedule that is schedule 2, which is the schedule for classification, that is one entry which says obligation to tolerate an act, right? If you remember that entry. So this entry says that where you have contracted and there was an obligation taken by you, whereby you agreed to tolerate an act, then in that particular case, that toleration is also a supply, and over there it is supply of service. Now there was a lot of dispute on this point, and later on it was clear or clarified by the law, and later on there was an amendment in the definition of supply, that schedule 2 is not a schedule to determine whether a transaction is supply or not. That has to be determined exclusively by section 7.1. You come to schedule because of section 7.3, which requires you to look at the schedule only for determining the classification, whether the transaction which is already concluded by you to be a supply would be a supply of goods or supply of service. And then further, they delinked this schedule 2 by introducing a new entry in the form of section 7 bracket 1a in the definition of supply. So now that section 7.1a, the new entry, is also making it clear that first the transaction should become supply as per 7.1. Then you apply the schedule 2 provisions to determine whether it is supply of goods or service. Now, what is the impact of this? That this entry, which I was just discussing, which is there in schedule 2, that obligation to tolerate an act will be a supply of service. Okay, but first you have to independently prove or independently establish that the transaction of tolerating an act is an independent supply. Now, there was a lot of confusion on this, that how to understand which transaction of tolerating an act is a supply and which is not. Now, in this regard, the point or the provision is that tolerating an act, what is the consideration? The consideration for that supply or that transaction is your penalty. So generally, when somebody is tolerating an act, so this is what happens in case of penalty. What was argued or what was understood by many, that when you breach a contract and I say that, okay, fine, you have now done this breach, so you pay me 5 lakhs and you pay me 5 lakhs. So it means I have agreed to tolerate your breach. And that is how people started treating this as a supply, or all the confusion arose. However, now this original circular, which is in front of you, I've just marked it, circular number 178, was a very detailed circular, and it clarified that merely because there is some breach given in the contract, and because of that clause, if any penalty is required to be paid, that penalty will not amount to a supply, because that breach will not be said to be an independent transaction. So what was made out from this circular was that only and only if there is a separate transaction whereby an obligation to do or not to do something or to tolerate an act is created by an independent transaction, then only that type of transaction will be a supply, which will be a supply of service, but where there is a contract for doing something, and in that contract there is a penalty clause that if you do not satisfy the terms of the contract, then some penalty would be levied. That penalty clause do not result in any supply, and there will be no tax liability. So this is what was clarified by 178 circular, that in order to be taxed, there has to be an independent contract only for that particular thing, which is doing an act or not doing an act or tolerating an act. Now, after that circular, many things relating to penalty charges, especially arising out of breach of contract, is settled. Now, what is this new circular or new issue? Now, this new issue arises because of some other change happening. What is this change? Firstly, this new issue is related to regulated entities. Now, what are regulated entities? So, regulated entities are those entities which are regulated by some authority or body. Example, banks. So, we all know banks are covered under the Banking Act, under the RBI terms, and they are regulated by RBI. Similarly, NBFCs, they are also regulated by the RBI. So, banks, NBFCs are examples of regulated entities. Now, what happened? RBI issued an instruction in August 23 asking banks to discontinue the practice of levying penal interest for non-compliance with loan terms. Now, you all know that during, not during, when you take a loan, in the loan application, there are various terms. And one of the terms are that if you do not repay the installment in time, or if you miss the due date, then XYZ amount will be levied as penal interest. So such type of terms are there which levies penal interest for non-compliance with some or the other loan terms. Now, after this instruction, since banks are obligated to follow RBI instructions, bank discontinued levying the penal interest. But now they are very smart. What they did was that instead of levying penal interest, they continued the same practice by levying the same thing by another thing, because they said that instructions say you should not levy penal interest. No problem, I will not levy penal interest. Now they have started levying penal charges. So let us say now you miss a loan installment. They will say that, okay, the punishment is that we will levy penal charges. Now the question arose. So once this amendment happened at the end of banks and RBI, the question arose was that whether this penal charges levied by bank for accepting your default will again get classified under the same schedule 2, under the same entry of agreeing to tolerate an act, agreeing to the obligation of tolerating an act. This again issue, when it came up to the council came up with this particular recent circular, which clarifies the same thing, exactly what is clarified in the previous circular, saying that these penal charges levied by the regulated entities in compliance with RBI directions are essentially in the nature of breach of terms of contract. So they are nothing new. There is no independent contract for doing this. Hence, these are part of your original loan contract, and it is similar to what is already clarified by the previous circular. Hence, they further clarified in this circular saying that on lines with the previous circular, the same clarification applies here. So no GST is payable on such penal charges which will be levied by the regulated entities. This is in compliance with RBI directions. Now, second amendment is in the list of RCM. Now, we all know that RCM deals with those transactions where the liability to pay tax is shifted from the supplier to the recipient. So in these cases, the liability to pay tax is on the recipient, and the recipient is required to pay or discharge the tax liability. Now, in this particular case, there are few amendments The amendments are more in the nature of making some change in the original entry. So what is that? First is sponsorship service. Now, whenever there is a sponsorship service, the original entry was saying that supplier is any person and recipient is a body, corporate or partnership firm located in India. So RCM applies. Now they have just made one change which says that any person other than a body corporate. So the impact of this is where the supplier is a body corporate, now it will not be under RCM, it will be under FCM. But where the supplier is not a body corporate, it will be under RCM, provided the recipient is a body corporate or a partnership firm. So this is an important amendment. So you should make a note of this. There is a very good possibility you may get a 2 or 3 marks case study type of questions, or in the case study question, this may come as a MCQ question. Next, service by way of renting of immobile property other than residential dwelling. Now, this is in simple words, renting of commercial property. Now, when we are talking about commercial property, what we have to understand. So in relation to renting of commercial property, the RCM entry said that when RCM will apply on commercial property rent, if the supplier is unregistered and the recipient is a registered person, this was the original entry. So let us say I am having a shop which I have given to you on rent. So the rent which I am charging on this shop is leviable to GST. There is no doubt, because there is exemption, but that is only for residential
Yes.
accommodation. Yes.
Sir, already up to input tax credit you covered in the last class itself.
What I covered, beta?
Up
The
to input
statutory
tax
update.
credit. Yes, sir. In the last class.
We have done this. You're sure?
Yes, sir. Up to 8th chapter you covered
Okay,
in the last
that's great.
class.
I was not aware, beta. Thanks for reminding. But then I think there is no amendment beyond that.
Uh, up
There
to
were amendments only up to that chapter only.
up to chapter 7 input tax credit you covered, sir.
1 second. So up to this chapter it is covered, you are saying?
Yes, sir.
Okay. Okay, so we have to cover from here.
Yes, sir.
Okay, beta. Thanks for informing. Okay. So just give me a minute. I still have a doubt in this, beta. I don't think. Just give me a minute. Manish ji, are you there? सर हमारा जनवरी का स्टैट्यूटरी अपडेट का ये सेकंड क्लास है मुझे करेक्ट नहीं नहीं सर करेक्ट सो ये मेरे हिसाब से जनवरी 26 का हम स्टैट्यूटरी अपडेट्स या जनवरी 26 अटेम्प्ट के लिए कर रहे हैं मेरे हिसाब से तो ये फर्स्ट क्लास ही होगा बट लीला इज सेइंग कि ये पहले एक सेशन हो चुका है I have taken statutory updates, but I don't recall it was in this class, because if it would have been this class, I should have completed. ठीक, anyways. So I'll then, Manish, I'll continue from this topic then. ठीक है ना? Okay. Yes, sir. नहीं मैं भी वही सोच रहा हूँ मैम से एक बार कंफर्म कर लूँ क्या क्योंकि क्या ये हमारा रिकॉर्डिंग अपलोड होना है ना, तो फिर ऐसा नहीं हो कि फिर रिकॉर्डिंग में वो चैप्टर्स नहीं आए। मैं एक बार मैम से कॉन्फर्म करूं, मैं फिर कॉल करके। यस, लीला, जस्ट अलाउ मी टाइम। मनीष जी, मे बी देन यू कैन स्टॉप द रिकॉर्डिंग फॉर द टाइम बीइंग इफ यू वांट। Leela, we will be taking the whole study again. So even if by chance it is covered, if by chance you have attended, we'll be taking whole because there are other students who have joined from different other mediums. Plus, this in this January 26, we have not taken this. So ma'am has said that I have to take this again. So anyways, beta, these are relevant updates. So even if we are repeating it, I'm sure it will be helpful to you in your exams. And anyways, all the topics will be covered today. So don't worry. Even if I'm repeating, it will be a second revision because these are very relevant topics. Fine, Leela. And there are students who have joined through YouTube and all. So for them, it will be required. Fine, beta?
Okay, sir.
Yeah.
Sir, regarding ICCL transaction,
Yeah, please.
that is RTP question number 5 question, sir,
Mm-hmm.
where the transaction value happened at 22 lakhs
Okay.
and the bill of entry is filed at 63 lakhs.
So correct, na beta. But again, what is important is you are referring to which transaction value. See, one is the import value, the price at which importer imported origin, the first importer imported. Second is the price at which the importer transferred to another person while the goods were in transit, that is in high seas. Then
Yes,
maybe
sir.
the second person transferred to the third person. So if there are multiple high sea sales, you will take the last high sea sale value as the starting point, first point. If let us say there is only one high sea sale, still the
Yes.
price at, because see, there are two values now. The price at which importer imported is also a transaction value, and the price at which that importer sold to another local buyer is also a transaction value.
Yes, sir.
Correct, na?
Okay, sir.
You recheck. We are here only. We can again check. And if you still have a doubt, you just post image over here so that I can also see what you're referring to. Right?
Okay, sir. Sir, I have another question.
Yes, go ahead, beta.
Sir, in case of free samples, this is not
Hmm.
considered as supply.
You're talking about GST perspective, right?
Yes, sir.
Okay, ठीक है.
The reference we have to given is Schedule 1, Para 2 or Schedule 1, Para 1 in accordance with Section 17, Subsection 5, considering it
Okay,
as business assets.
okay. So what is your query, beta?
Which reference we have to give in the answer for free
Good. I'll
free
tell you.
samples?
Sorry, what is your last sentence?
Free samples.
So see, where as a business I am distributing free samples, I am covered in 17.5.
Yes, sir. No,
So,
it is.
so whatever ITC if you have availed, you will have to reverse that ITC, beta.
Okay.
Now, I don't know what you are referring to or from where you are reading. I'm sure it was wherever from you are reading, it is a discussion point that it is like a question that whether it will be covered in Schedule 1, Entry 1, or it will be covered in 17.5, which will be the applicable entry. I think you are reading it that way. So the conclusion to that is that if it is distribution of free sample of your own goods, that is the goods in which you are dealing, then the ITC has to be reversed as per 17.5H.
Okay.
Correct? Still, if you have a doubt, you can read out. I can clarify your answer, your issue. If you are referring something where you are still having a doubt, you can read out the relevant para. I'll clarify.
And I am thinking that the ITC is not at all available, and
Correct?
sale to and distribution of free samples to unrelated parties. So we have to refer Schedule 1, Para 2.
Means if it is to unrelated parties, you'll refer Schedule 1, Para 1. Na? Because Para 2 is applicable when you are giving anything free to your related persons or distinct person. So if you are saying it is to unrelated person, you should refer Para 1. Na?
Okay.
See, Schedule 1, Para 2 is applicable whenever goods or services are supplied free to your related persons or to your distinct persons.
Okay.
If you are saying free sample is given to unrelated person, it cannot be Para 2. It has to be then. Even if you want to compare, you should compare 17.5H with Para 1. I hope this point is clear.
Sir, free samples can be considered as business disposal of business assets.
Correct. So that's why I'm saying, so that is Para 1. Na? So that's why I'm saying, first, let us be clear on which para you should refer. You are saying Para 2, I am saying Para 1.
Yes, sir.
Correct. So do you have schedule in front of you?
Yes, sir.
So see the schedule, Schedule 1. So what you are talking about should be covered, even if it is covered, it should be covered in Para 1, na? If it is to unrelated person. Para 1 is
Yes, sir.
what? Permanent transfer or disposal of business assets on which ITC has been claimed.
Yes, sir.
Correct?
Yes.
Now, So for one thing is clear that we have to compare with para 1 and not para 2. Is that clear first?
Okay, sir.
Correct, na?
Yes, sir.
Now you have any further doubt in this or question in this?
I have one doubt whether free samples will be considered as business assets.
Correct. So in short, now the question is whether for free sample you should apply 17.5H or you should apply para 1 of schedule 1. Correct?
Yes, sir.
Answer is you'll apply 17.5H. Why? I'll tell you. See, when we talk about ITC, so first, when purchase happens, you check ITC, correct?
Yes.
Distribution of samples will happen afterwards. Na? So first, your first transaction in the business is purchasing those items which you are going to distribute as free sample, right?
Yes, sir.
Now, when you purchase those items which are meant to be distributed as free sample, then in the first place, you will not take ITC because of 17.5H.
Yes.
Correct, na? Firstly, is this clear? So you will not take ITC under 17.5H. Is this clear?
When we purchase the inputs, we don't know whether we will use it for free samples or taxable supply.
Perfect. No problem. See, still, so let us say you have purchased it today. Even if you decide in future to give this as free samples, still 17.5H will attract. Reason 17.5H is more precise entry as compared to para 1. Para 1 is more generic.
Yes, sir.
Correct. So let us say
Yes.
even in future I decide to give certain goods as free samples, I will still be hit by 17.5H. You agree to
Yes.
this?
Yes, sir.
Now, if I get hit by 17.5H and I reverse the ITC on those free samples, then automatically I will not be covered in para 1 because para 1 triggers only if I have taken ITC. Now, if I have already reversed ITC on those samples, then I should not be covered in para 1.
Yes.
You
Then it
understood?
will not be supply.
Exactly, because see, ultimately, understand one thing, Leela. On any item, I have to pay tax once. Now, either I pay tax by reversing the ITC of that item, or I pay tax by treating it as supply and pay a fresh tax. Agreed?
Yes, yes, sir.
So, if I have reversed ITC using 17.5H, then by default, I cannot come in part 1 or para 1 of schedule 1.
Yes, sir.
Correct? Na?
Okay,
And
sir.
that is why keeping that in mind, if you see para 1 is specifically giving the condition where ITC is availed. Otherwise, there would have been double tax. Once you have on one side you're reversing the ITC also, and on the other side you're treating it as supply also.
Okay, sir.
So there cannot be tax twice. So you pay tax only once by reversing the ITC.
Okay, sir. Clear, sir.
Understood, na?
Understood, sir. Sir, I have another doubt.
Please go ahead.
Sir, in case of Customs Act valuation of assessable value,
Hmm.
buying commission paid in India by the buyer,
Hmm.
where should we present before the customs FOB or after customs FOB?
Before customs FOB. See, customs FOB is the value considering all adjustments except 10(2). 10(2) is what? 10 bracket 2 is transport and insurance. All other
Yes.
adjustments are under 10 bracket 1. Correct, na? You have so many adjustments, commission, then a proportionate amount of goods which are supplied by the buyer to be used in his supply. So all the adjustments are in 10.1. After all adjustments of 10.1, what comes is the customs FOB. And on that customs FOB, there are only further two adjustments. One is of freight, one is of insurance. So buying commission will be before customs FOB.
Sir, in the RTP answer question number 20, it was taken after customs FOB. So that I have a doubt.
So I'll just check, beta. No problem.
Okay.
See, there is a possibility that for a particular, what you can say, item, there can be a difference of opinion. But if you find a similar answer or similar point in other any reference material of institute, then I will request that you please follow that for exams. Correct?
Okay, sir.
Yes, but I will also recheck this and you just let me know which RTP you are referring to. But for the time being, since it is given in our institute's material, I will recommend that you follow that RTP for exams.
Yes, sir. This is January 26th edition of RTP, sir. I am
Okay,
referring.
fine, fine. I'll check that bit.
Question number 20, sir.
20. Okay, understood. I'll check that bit.
Okay, sir. Thank you.
Yes. Any further questions, beta?
Sir, please check high C sale transaction also. That is question number 5, sir. MCQ question number 5.
Of same RTP.
Yes, sir.
Okay, beta. I'll do check after our today's class, right?
Okay, sir. Thank you.
Yeah, yeah. So coming back to the point, so we were discussing this RCM. So this RCM is renting of commercial property. Now the position is like this. If the supplier, that is the landowner or the property owner, is a registered person under GST law, then the renting will be compulsorily under forward charge only. If the person is unregistered, the supplier, that is the owner of that property is unregistered, then it will be under RCM provided the recipient is registered. So both conditions have to be satisfied, supplier unregistered, recipient registered. Now this was till this amendment had come. Now this amendment has just made one more addition to this, further saying that supplier unregistered, recipient registered, and the recipient should be a person other than a composition dealer. So the registered recipient can be any person other than a composition dealer. It means if the if the recipient is a composition dealer, even though registered under GST, RCM will not apply. So that is what has been added, and this is what is the effect of this addition. So in other words, only where the recipient is a regular registered recipient, then only RCM will apply. A composition recipient, RCM will not apply. Next, clarification in respect of input tax credit availed by electronic commerce operator where services notified in 9(5) of the Act are supplied through their platform. Now, what is this? So here, the confusion is because of overlap of few provisions, because over a period, different points were added, amendments happened, and then this overlap happened, which created this confusion. What is the overlap? Now, the issue is that you are e-commerce operator and you are the one whose services are covered under section 9(5). Now, firstly, understand what it is. So 9(5), which is a part of your levy section, says that in respect of few notified services, the tax would be paid neither by the supplier nor by the recipient, but by the e-commerce operator. So what is this provision firstly 9(5)? I'm just touching that so that we can further understand the issue in this and the clarification here. So 9(5) is a special charge provision which says that neither supplier nor recipient, none of them have to pay the GST. The GST is payable by the e-commerce platform. Now, interestingly, there is an overlap. What is the overlap? This 9(5) notified services covers one, services of local delivery, whereby for example, you order something through Blinkit, you order something through Zomato, you order something through Swiggy. Now, one charge is of the delivery. Plus, the second is, let us say you have ordered food. So the another charge is for the restaurant. Now, interestingly, there are two services. One, the restaurant service, where 9(5) says that in case the restaurant person is an unregistered supplier, then you have to pay tax as the e-commerce operator treating yourself similar to that of supplier. That is one. Second, since you are also doing delivery service, which is also liable to GST, and that is your own service. So even though you are an e-commerce operator, but your service is basically of giving delivery. So when you are charging for delivery, that is also under 9(5). So what is the point? So the e-commerce operator required to pay tax under 9(5) in making supplies under two counts. First, supplies notified under 9(5) for which he is liable to pay tax as if he is the supplier. So in this, you take example of the restaurant where the restaurant is unregistered. So 9(5) says if let us say this Blinkit or Zomato or Swiggy is delivering food, that is you go to these apps, you select one of the food joint. From there, you want this Blinkit to carry and deliver you the food, or the Zomato or Swiggy to carry and deliver the food to you. So firstly, this is a service notified under 9(5), whereby this app, the Zomato, Swiggy, Blinkit app, has to pay tax on the restaurant, that is the food bill. Fine. So for this first service, the app is made liable to pay tax under 9(5). So it is not the service of the app. See, the app is not engaged in restaurant services. App is engaged in delivery services, but because of 9(5) for restaurant, the app has to pay tax. Done. Now, what is the second part? Supply of his own service. So what is the service of this app? The main service of this app is giving you delivery. Now, this is taxable to the app, not because of 9(5). It is taxable under 9(1) itself because app is acting as a supplier of this delivery service. Now, what is the question or what is the issue? For providing the service mentioned in 2 above, that is a delivery service, which is its own service, the ECO procures inputs as well as input service for which it avails ITC. Now, since I am running this business of providing delivery using the app, I am incurring a lot of expense for this. I have maintained office for which I am incurring rent and all those costs on which there is GST. I am running this whole app for which I have, let us say, hired a person who would be developing, maintaining the app. So I'm having lot of input services on which I am eligible for GST. Now, what is the issue? Whether ECO is required to pay tax under 9(5) is liable to reverse proportionate ITC on the input services to the extent of supplies made under 9(5). Now, what is the challenge? So, as Blinkit app, as Zomato Swiggy app, I am playing two different rules. One, I am paying tax of the restaurant because of 9(5). Because I am the app, I have to pay tax as an e-commerce operator of somebody else's service, which is 9(5) rule. Second, I have to pay tax on my own service, which is the main business I'm doing, that is making goods available or allowing you or helping you in getting goods transported or delivered from one place to another. This is my own service for which anyways I am liable to pay tax under 9(1). And for this 9(1), I am allowed to take ITC. But for this 9(5), I am not allowed to take ITC because over there I'm simply doing what? The food bill, I am just adding GST, collecting and paying. So for the services which are covered in 9(5), I am not eligible to take ITC. But for my own services which are covered in 9(5), I'm eligible to take ITC. Now, in this particular case, the issue or the question is that whether I'll have to reverse proportion ITC to the extent of the services of 9(5) which I'm providing, which is not my service, it is somebody else's service, but I'm made liable under 9(5). Now, again, here there was firstly a previous circular which said that it was clarified by circular number this, dated this, that ECO shall not be required to reverse ITC on account of restaurant services where the ECO is paying tax of restaurant services under 9(5). So let us say Zomato, Swiggy are providing you delivery where they are picking up the parcel from some joint, and that joint is not registered, so it is not going to charge any GST on that. So as per 9(5), Zomato, Swiggy are liable to pay the tax. Fine, no problem. The first clarification is they don't have to reverse any ITC. It has also been clarified that the ITC will not be allowed to be utilized for payment of tax under 9(5), and the whole liability will be required to be paid in cash. Now, see, for these 9(5) items, I'm not allowed to utilize ITC. So there is a difference that if I'm already having ITC, whether I can utilize it to discharge a tax under 9(5), the law is clear, no. So where as a Zomato, Swiggy, Blinkit app, I'm paying tax of the food bill, where I'm acting as e-commerce operator and this tax I'm paying under 9(5), that case, the tax of restaurant service under 9(5) has to be paid compulsorily in cash. And even if I have any other ITC, which otherwise I am eligible for, but since it is not allowed to be set off against this 9(5) liability, that ITC will be there, but I cannot utilize it for this 9(5) liability. This principle also applies to supplies made in respect of any other service which is covered under 9(5). So whatever services are covered under 9(5), same rule applies. I have to discharge the tax fully without utilizing ITC. Now, it is clarified that the ECO who is liable to pay tax under 9(5) notified service is not required to reverse the ITC on input services proportionately under this section to the extent of supplies made under 9(5). So, I am not allowed to utilize ITC against my 9(5) liability. That is okay. But the law has clarified, or the circular has clarified, but that doesn't mean that whatever ITC you are already having, you will have to reverse. It means whatever ITC you are having, that entire ITC you are entitled to avail. Only thing is you cannot knock it off against 9(5) liability. It is further clarified that ECO will be required to pay full tax liability on account of supplies under 9(5) in cash. That is only through cash ledger. The credit availed by him in relation to input services used to facilitate such supplies cannot be used for discharging such tax. However, such credit can be utilized for discharge of tax liability in respect of supply of services on his own account. So this credit which I am having, this credit I can very well utilize for knocking off the liability of my supply. And what is my supply? My supply is the delivery. So the delivery service which I am providing, the delivery facility which I am providing, on that also there is a GST. But that is GST in 9(1) in my own capacity as a supplier. It is not somebody else's GST I am paying. So for that output liability, I can avail and utilize the entire ITC. For 9(5), where I'm discharging somebody else's liability because of 9(5), I will not be allowed to utilize the ITC, but the ITC, whatever I'm having, I also need not reverse it. That ITC I will utilize against my delivery services liability. This is what is clarified. So continuing the previous circular clarification, this part is added to make the clarification complete. Then comes the next issue, whether DDA is Delhi Development Authority, can be treated as local authority. Now students, why this is important? See, this is important because in the definition of local authority, there is a lot of confusion. Now, what is this confusion? The definition of local authority is not complete because not complete means the definition of local authority goes like this. It says that local authority means municipal corporation, municipal committee, cantonment board, and any other authority. Now, when it says any other authority, it makes the definition very wide open. Now, the question was specifically in relation to Delhi Development Authority, that can Delhi Development Authority be called as a local authority under the GST law? Now for this, when you see the definition of local authority under section 2 clause 69 of the act, it says that it inter alia means municipal committee, Zilla Parishad, district board, or any other authority. This is the main point on which the entire discussion or the entire doubt is. So it means any other authority which is legally entitled to or entrusted by the central or state government with the control management of municipal or local fund. So this any other authority will be called as local authority if it is entrusted with the control management of municipal fund. So an authority which is similar to elected self-governing body such as municipal committee and which is given the power to control and manage the fund will be termed as local authority. So this is what is the interpretation. And now on the lines of this interpretation, the final conclusion is it is clarified that DDA cannot be treated as local authority as DDA does not meet the above requirements. Now coming to place of supply. Now what is the issue or problem with place of supply? Now again in place of supply, there is some overlap because of which a confusion has come. The overlap is between section 12.2 of the IGST Act. Now, if you remember 12.2 of the IGST Act, it deals with place of supply provisions where the supplier and recipient both are from India. It means it is dealing with domestic supply of service, place of supply, and it is the general rule. Then you have section 31.2 of the CGST Act and rule 46F of the CGST Act. Both of these deal with conditions relating to invoice. Now, what is the overlap and what is the issue? Let us understand. So 12.2, as I said, it is what? It is the place of supply provisions where supplier recipient both are from India. That is, we are talking about domestic supply of service. In this, it is saying, except where services are specified in 3 to 14, that is, in 3 to 14 clauses or subsections, you are given some specific place of supply rules for specific services. So where your service is not covered in that, it means we are in the general rule. Now, what does the law says? Where the supply is made to any person other than a registered person. So for registered person, firstly, 12.2A applies, which says that place of supply is the location of registered person. So that is solved. In respect of B, which applies where supply is made to a person who is not a registered person, what it says, the place of supply shall be the location of the recipient. So again, they are ready to take a recipient's location where address is available on record. And this is the part which is now going to have a overlap or have some internal contradiction. So what it says, if you are supplying services to an unregistered person, we are still going to take the place of supply as location of the unregistered person, provided you have the address of that person on your record. And if that address is not available, then we will take location of supplier. So this address on record is very significant because if it is there, then you take recipient's location as place of supply. If it is not there, you will take supplier's location as place of supply. So firstly, this is clear. Okay, how this part is relevant. Now coming to that part which has given rise to this issue and hence the need for this circular. Now, when you read section 31.2, it deals with what? It deals with supplying taxable services, which says that a registered person who supplies taxable service may be before or after the service, but within the prescribed time, which I'm sure you all know it is 30 days, issue a tax invoice showing description, value, tax charge, and such other particulars as may be provided. Further, the government may, on recommendation of Council 1, specify category of supplies in respect of which tax invoice shall be issued within some prescribed time limit. Okay, so one provision is that government may prescribe certain supplies for which tax invoice shall be issued within some particular time limit. That is not 30 days, some other time limit. We are not concerned with this. We are concerned with this. Second, what government may do on recommendation of council by notification, what it may provide, it may subject to the conditions mentioned therein, specify the category of service for which any document issued in relation to supply shall be deemed to be a tax invoice. It means you may not issue a proper tax invoice. I'll give you examples of this. The example is when you are going to a movie, the theater, the movie, what you call it as hall, exhibition hall, in simple words, theater, multiplex, will not be giving you a proper tax invoice. They will give you small printed strip, and the law has allowed that strip to be considered as tax invoice. Fine. Next, in some cases, the law may even relax the condition of issuing the tax invoice completely. Now, what is the issue? The issue is that when you read section 31.2, which we just saw, and proviso to rule 46F, it leads to a confusion that in respect of supply of service made to unregistered person, irrespective of value of supply, the supplier is required to mandatorily record the name of the state of the unregistered recipient on the tax invoice. Now, when you read this rule 46F, it says that where you are making supply of services to an unregistered person, whatever be the value, at least you have to record the name of the state. So effectively recording of the name of the state of an unregistered recipient on tax invoice in respect of supply of service shall be deemed, now this is the main part, it shall be deemed to be the address on record. Now 12(2)(b) said that if the address exists on record, we will take location of supplier, location of recipient as place of supply. And your invoicing rules have themselves relaxed the condition of mentioning full address. It says even mentioning only the name of state. So address is not there. That is what is the question. So address, putting address has been relaxed when the supply is made to unregistered person. But the place of supply rule says that if address exists, we will take location of recipient or else location of supply. Now, when the invoice rules itself has relaxed the condition of putting the entire address and only putting the state name, whether you will say that address exists or whether you will say address does not exist. So it has been clarified here that in such cases, because of the rule of invoice where you are only mentioning the name of the state, we will deem that the name of the state is address, and in other words, we will treat this as satisfaction of the requirement of 12(2)(b). That is, the place of supply will still be the location of recipient. So in such cases, the place of supply of service shall be considered as the location of the recipient of the service. It means writing of state name only, not any address. So I'm not writing your complete address, the block number, the building, street name, nothing. Only writing your state name, and that also in case of unregistered recipient for whom this condition has been relaxed by Rule 46 Act proviso. Then in that particular case, that name of the state should be treated as address on record. So the combined reading of the definition of electronic commerce operator as per these provisions, along with Rule 46F, provides an understanding that all services supplied to unregistered recipient over the digital or electronic network, either by supplier using his own digital or electronic platform or platform of any other person. In that particular case, it will be covered by the proviso of 46F. And since it is covered by proviso to 46F, hence finally the conclusion is the provisions of 46F shall be applicable in respect of all online services. And finally, in respect of following cases of supplies to unregistered person, the supplier are mandatorily required to record the name of the state, irrespective of the value, and to declare the place of supply of the said service as the location of recipient. So in respect of following services which are named here, that is online digital services, OIDER services, online money gaming, for all this, mentioning the name of state will be treated as address on record. And since it is treated as address on record, that will be the place of supply. Then coming to exemption. In exemption, the changes over here are only cosmetic changes. So the word and has been replaced by or, because that is what is the correct interpretation. Secondly, in case of entry 69, where exemption is for service provided by National Skill Development Corporation, National Council, etc., and the services in relation to National Skill Development Program, they have added one more person, because actually training is given by these persons only. So these are the private bodies which partner with the government under the National Skill Development scheme. So actually the training is provided by these private bodies who are the training partners approved by the National Skill Development Corporation. So their services are also exempt. That is what is amendment made. Then another amendment is in relation to insurance. Now there are entries added. First entry is 36B. What it says: service of insurance provided by Motor Vehicle Accident Fund, constituted under this section of Motor Vehicle Act, against contribution made by the insurer out of the premium collected for third party insurance. Now we all know that when we take vehicle insurance, many times we take a third party insurance. Now in such cases, the service of insurance which is provided by the Motor Vehicle accident fund. So this is a fund created under which the third party insurance premiums are being collected, and that third party premium is what is exempted from GST. Next, clarification in respect of applicability of GST on facility management services provided to MCD. Now, MCD is again a local authority. Now, we all know there is an exemption entry when services are supplied to government, central, state, or to local authority. Then the inward service to these bodies, authorities will be exempt. One, if it is a pure service, or if it is a composite where goods are also included, if the goods do not exceed 25%, that will be exempted. Now, in this relation, there was an issue or question that MCD, which is undoubtedly a local authority, there is no doubt on this. MCD headquarters is regularly receiving some services like housekeeping, civil maintenance, furniture maintenance, then their garden maintenance, and these services are provided by some agency. So let us call them as facility management agency. So now the MCD headquarter office has to be maintained. So they have outsourced the work to all the agencies, and these agencies are providing these different services. Now the question is whether the inward services received by MCD with respect to its office maintenance is exempt under entry 3A. Now, what is the clarification? If you see entry 3A, what entry 3A says? It provides exemption for composite supply of goods or service where the goods component does not exceed 25%. So that is agreed, no doubt with that. But we are missing one thing that it further says where the said composite supply provided to government or local authority by way of activity which is in relation to a function entrusted either to panchayat or to municipality. So only where the inward service is in relation to the function of a municipality or in relation to the function of panchayat, only then that inward service is eligible for exemption. So what is clarified? The service of facility management such as housekeeping, maintenance, horticulture, etc., are not in relation to performing the functions entrusted either to municipality or to a panchayat. And since these inward services are not in relation to performing any such functions, hence exemption does not apply and GST will apply. So the inward service or MCD is leviable to GST. Next is clarification in respect of exemption. Which exemption? So you are a payment aggregator. Now, who is a payment aggregator? Let us understand. So payment aggregator is that person who is on behalf of businesses doing the payment collection and then distributing it. Now, here what it is. So let us say I'm running a shop, and in this shop, I have kept that card swipe machine. Now, this card swipe machine is provided to me either by a bank or by some payment gateway person. Let us call that person as a payment gateway for the time being. Now, when you come to my shop, you do any shopping, for payment, you are swiping your debit card, credit card. Now, whenever a card is swiped, it means a transaction of payment has happened. The payment will be collected by this particular payment gateway, or let us say payment aggregator. From whom? From your bank. That is a bank of whose debit card, credit card you are carrying, and it will be transferred to my bank. So this payment gateway, payment aggregator is acting as a bridge between your bank and my bank. So when you come to my shop and you swipe the card, the person who has given me the swiping machine is the payment gateway, payment aggregator. He is going to collect the money from your bank because you have swiped the card of your bank and give it to my bank. Now, for this, definitely the person is going to put some charges on me. Now, the question is whether the charges imposed by this payment aggregator, payment gateway is leviable to GST. The answer is yes, it is leviable with one exemption. What is that exemption? Where the amount of single transaction does not exceed 2000, then whatever are their charges, that is exempt. So let us say the swipe you have done is of 1800, is of 1500, is of 1100, or of 2000. Then on this, whatever this aggregator is charging me the fee for doing all this collection and deposit is not leviable to GST. But let us say your shopping is of 5,700 and you have swiped the card of 5,700, then whatever charges he is imposing is leviable to GST. Now, this is what is the point. Now, what is the issue? Whether the exemption under this entry is available to payment aggregator in relation to settlement of an amount up to 2,000 in single transaction to credit card, debit card, or other payment card services. So the question was whether the swiping of card is also covered. So the transaction done using any of the cards will it also enjoy the exemption. Now what is given? Entry 34 provides exemption to services by an acquiring bank to any person in relation to settlement of an amount up to 12,000 in a single transaction transacted through credit card, debit card, charge card, or other payment card. An acquiring bank means a banking company, financial institution, non-banking company, or any other person. This is what is again important. Who makes payment to any person who accepts the card? So the question is where this processing of payment, that is taking the payment from your bank or card to my bank, if this is done by a person who itself is not a bank, whether the exemption will apply. So the answer is lying in the definition of the acquiring bank itself. So what it says, the definition covers any person who makes the payment. Now, RBI regulates these payment aggregators, and since it is regulated by the RBI, it will be covered in any other person. Hence, these payment gateways are defined as an entity that provide technology infrastructure to route and facilitate processing of an online payment. So like for example, you are even using this Paytm. What Paytm does, when you are doing some payment using Paytm, you scan the QR code on Paytm app and pay. What does Paytm do? It simply plays the role of payment gateway. It takes money from your bank and gives it to the merchant's bank. That is what your payment gateway services are. And what is clarified is that these payment gateways, these payment aggregators will fall in the definition of acquiring bank in that second part. So explanation to the said entry, as they make the payment to the merchants who accept debit card, credit card, etc. Consequently, exemption under 34 is available to whom? RBI regulated payment aggregators or gateways in relation to settlement of amount up to 2,000. It is also clarified that this exemption is limited to payment settlement function only, which involves handling of money and does not cover payment gateway services. So where they are charging for using their gateway services, that is taxable. But where they are charging you on the basis of transaction for handling your money, only that service where the transaction rate does not exceed 2,000 is exempt. So you have to be clear as to which service value you are checking. If it is the service value for the payment gateway, that is using their portal or using their what you can say medium to make payment, then that charges are taxable. But where they are providing you the service of clearing your payment, collecting it from this bank and depositing it in this bank, over there, this exemption up to 2,000 per transaction shall apply. Then coming to clarification with respect to vouchers. So with respect to vouchers, there was again a lot of confusion that whether there is any tax on the voucher itself. Now it has been clarified that voucher are neither goods nor services. In that particular case, where vouchers are acting as a prepayment instrument, means the vouchers are used as a prepayment instrument and they are covered in the definition of RBI of prepayment instruments. In that case, they take the character of money. So where you are using vouchers as a payment, as a consideration, they partake the character of money. And since they partake the character of money, hence there will be no GST on the voucher per se. Now here there are two possibilities. First, the voucher is partaking the character of money, that is, it is being used as a consideration to settle an obligation. So what is the example? So the example is you go to a mall, you buy a voucher of rupees 5,000 for your friend and you give it to your friend. Why? Because it is your friend's birthday. The friend takes that voucher and goes and does shopping. Now, in this case, when the friend is doing shopping, the voucher which the friend is using at the time of shopping, it is using it as a consideration to settle his obligation of payment. So, where this voucher, which is given by that mall to you and you have handed over to your friend, where this voucher is used as a consideration, the voucher is part of the definition of money. There is no tax on the voucher. So when you go and buy the voucher from the mall, there will be no GST on that because their voucher is acting as money. Where voucher is not acting as a prepaid instrument or money, then what? Now here, what is important is in market, there are some entities whose business is to print and sell their vouchers. Now, why will you buy their voucher? Because this voucher you can use to give to your employees, to your customers, to anybody who is related to your company as a gift where they can go and utilize this voucher in their shopping. Or where, let us say, as an employer, you are obligated to provide food to your employees, but it is not possible for you to maintain a canteen or a restaurant in your factory. What you do is you give them the food coupons using which they can buy and consume food anywhere they want. So for that also you need a voucher which is called as the food coupon. Now, I am a company like Sodexo, which is the most common example of this vouchers. I am in the business of printing and selling these vouchers. Now, when I print and sell these vouchers, for me, vouchers are like my product, my commodity. So this case B is dealing with the company who is printing and selling its vouchers. Now, it may be possible that I may not be directly selling it to the end user, that is the company who wants it for its employees. I am selling it through a chain, a channel whereby I have appointed a distributor. Distributor has appointed some retailer or some agent. I sell to the distributor, distributor sells to that retailer or agent, and that person sells it in the market to the respective companies, whoever wants. Now, in this case, when I'm selling to the distributor and distributor is selling to the agent and the agent is selling to the company, all these transactions are done by we three people as a businessman of that commodity, which is the voucher itself. Now, in this case, the question arose where we are dealing in vouchers. That is, I am buying, selling the voucher. Then whether the voucher is liable to GST. Now, one thing is clear. Here we are not dealing in vouchers, like we are not using the voucher for settling any liability. We are purchasing, selling the vouchers. In such case, voucher is not money. Agreed. But then it is clarified that in such case, voucher take the character of actionable claim. And since it takes the character of actionable claim, for such vouchers, when you see Schedule 3, firstly, you see the definition of goods. Vouchers are, actionable claims covered as goods. Okay, great. But when you see Schedule 3 says that if you are dealing with actionable claims, it is outside GST, except specified actionable claim. And specified actionable claim is only gambling, betting, lottery, online money gaming. So other than that, all other actionable claims are outside GST. So by default, in this case also, the vouchers will be outside GST. So they will be neither supply of goods nor supply of service. So what are the issues? Whether transaction in vouchers falls under the category of supply of goods and service. So where the transaction in vouchers themselves cannot be considered as supply of goods or service. Hence, in that particular case, the supply of underlying goods service will be taxable, but the supply of vouchers is not taxable because the voucher over here in issue 1 or case 1 are being used as money. What would be the GST treatment of transaction in vouchers by distributor, sub-distributor? That is the second case. In the hands of distributor, sub-distributor, this voucher is not money, but this voucher is goods. But which goods? Actionable claim. And for all actionable claim other than the specified actionable claims. Schedule 3 excludes them, so there will be no GST. So vouchers are distributed through distributor, sub-distributor on principal to principal basis. Again, the vouchers will not be taxable. Why? Because they become actionable claim. But where vouchers are distributed through your distributor, sub-distributor, and the distributor, sub-distributors are given commission or fees, then this is the only case where there will be GST, because in this case you are not levying GST on the voucher, you are levying GST on the service which is given by the agent to you. So here the fee or commission given to the agent for helping you distribute the voucher, helping you sell the voucher, that fee, that commission is liable to GST. Next, what would be the GST treatment of additional services like advertisement, co-branding, marketing, promotion, customization? See, any service which is given in addition to the voucher, that will always be liable to GST. There is no doubt at all. So only two scenarios are liable to GST in relation to voucher. First, where you have appointed agents, brokers, sub-brokers who are helping you in the transaction of vouchers and you are paying them commission. That commission is leviable to GST because that is not the value of voucher, or you are not buying and selling the vouchers. You are paying commission for helping you in the business of voucher. That is leviable. Two, where there are some parallel services given like branding, marketing, co-branding, that is also leviable to GST. And the last clarification is that let us say we come back to the first scenario of voucher. Your friend has purchased the voucher given to you to be utilized whenever you are doing shopping. Now that voucher has an expiry date of 31st of December. For some reason, you miss to go to the mall and make your shopping till 31st of December. You go in the month of February. Now, when you go in the month of February, the mall person says, sorry, I cannot accept this voucher because the voucher has expired. This is what they are calling it as unredeemed voucher. Now, in this case, can there be GST on the voucher? Because now the voucher will not be used as money anymore. The answer is no, because even though now the voucher cannot be used as money, but originally when the voucher was purchased by your friend and given to you, at that time the voucher was in the nature of money, and now no purchases can be done using the voucher. Still, now you cannot come back and tax the voucher. Therefore, there will be no tax, no GST on account of such unredeemed vouchers which has expired. So this is a very important clarification. So kindly make a note of this. I'm expecting that you will have a question specifically on the voucher part. Now, this is again a very important clarification. Now, this clarification is with respect to one of the conditions under the input tax credit chapter. Now, for the purpose of getting ITC, section 16.2 is there, or rather section 16 is there. Section 16.1 says that the recipient should be a registered person and the goods services should be purchased in the course or furtherance of business. Fine. Section 16.2 has put down multiple conditions. One, you should have tax invoice. Two, you should have received the goods or services, and then there are furthermore conditions. Now here, the entire issue is with relation to receipt. Now the act requires that in order to get ITC benefit, you should have actually received the goods or service. Actually, word is not there. So you should have received the goods or service. Now, first question was whether this means that goods and services should have come to your premises. Second question is, what if you are taking the delivery of the goods and services at some third place, which is not your place? Whether in such cases, ITC will be available. Now, why these two questions are raised? Because these two questions have what has culminated into this circular and the issue. So what is the issue? Many times you are taking the delivery of goods at the place of the supplier. Means the supplier has said, boss, you want the goods, you come to my place, you send your truck, you send your vehicle, I will load the goods in that vehicle. That's it. So it is your responsibility to take the goods from my premises to your premises. I won't do anything. So the point or the issue is that the delivery has to be arranged by the buyer. Now, today is 27th of November. Let us say today this transaction happens. I've purchased the goods, but you have asked me to take the delivery from your premises, which is called as X works delivery, X works contract. I said, fine, I'm okay. So I'm sending my vehicle there. My transporter is collecting the goods from your premises, let us say today. And he starts from your premises, which is in Delhi, and reaches me, which takes around 8 days. And by this time, we are in the month of December. Now, here the question is, today the goods have not reached my premises. I have taken the goods, but at a third place. Further, I myself, that is the business or the owner, has not got the delivery. The delivery is taken by my agent, that is the transporter who is acting on my behalf. Now, whether all these conditions will entitle me to take ITC today, or I will say, no, no, receipt has to be interpreted as receiving in my premises or physically receiving by me. Now, for this, there was a lot of dispute debate. So this clarification had come up. Now, what does this clarification states? Now, this clarification is dealing with the situation scenario where I have taken delivery at your premises. Now, first thing to be clarified. Under GST law, this condition under section 16(2) that the goods or services should have been received, there is no further condition received in the premises. Why this is important? Because in the previous law, excise law, under the excise SENVAT credit rules, like how we have input tax credit, at that time we used to call it a SENVAT credit. Under the SENVAT credit rules, there was a specific requirement that the goods should have come to the premises of the manufacturer, that is a factory of the manufacturer or the premises of the service provider. Only in that case, you could have taken the credit. That was in excise. Now, there is no such requirement under GST that the goods should have come to your premises. In case of GST, the position is that even if the goods have not reached your premises, we are okay. Receipt should have happened. So first premises condition is gone. Now when it says goods should have been received, the second question is whether it should be received by me physically or if a person on my behalf is receiving the goods, whether that would be sufficient. Now for this question, there is nothing given in excise law. There is nothing given in GST law because the only condition in GST law is goods should be received. It is not saying by whom. So when we interpret it in the light of other laws and in the light of the general definitions of receipt, we come across a concept called as constructive receipt or constructive delivery. Now, what is this word constructive? So one, there is actual receipt. So when I receive the goods physically, so the goods reach my hand, it is called as actual receipt. What is constructive receipt? So where another person, like in this example, the transporter, is collecting the goods on my behalf and the transporter has received the goods. I have not yet received it physically, but if the transporter is acting on my behalf, he is acting in the capacity as my agent and he is collecting the goods, it is as good as I have collected the goods. So that is how this circular says you should interpret the condition of receipt at where the receipt has happened. How? That the goods have been collected first, may not be at my premises at some third place. Two, may not have been collected by me, but by somebody else on my behalf. Both things are okay. So my premise not necessary, myself not necessary. So even if the goods are collected, like now coming back to this point, where they are collected at the factory gate of the supplier, which is called as X works delivery or X works contract. And as per the terms of the contract, the property in the goods, which is the requirement of sale, the property in the goods has passed on to me at the factory gate of the supplier. When the goods are handed over to my transporter, then in the eyes of law, the delivery is complete at the factory gate. And if the delivery is complete at the factory gate, so receipt has also happened at the factory gate. In such cases, I am entitled to take the credit today itself. I need not wait for the goods to come physically to my premises or physically to me. So the issue which arose for consideration was whether ITC can be availed by the dealer only after, here the goods are the vehicle. So I'm the vehicle dealer. You are, let us say, the vehicle manufacturer. You are the Mercedes-Benz company. So let us say I've ordered 20 Mercedes-Benz C-class or Q-class cars. And you have said that I have to collect it from your factory, which is in Faridabad. So I send my transporter, he's collecting this, and he will bring the vehicles to my showroom. So issue arose that whether ITC can be availed by the dealer only after the vehicles are physically received at my premises. So the answer or the clarification given is the property in the goods can be considered to have been passed to the dealer by the manufacturer, OEM is the manufacturer, upon handing over the said goods to the transporter at his factory gate, meaning thereby that the goods can be considered to have been delivered to the registered person. This is very important. It will be considered to have been delivered to the registered person through the transporter by the supplier at his factory gate, and the supply of said goods can be considered to have fructified at the factory gate itself, even though the goods may be physically received by me afterwards. Hence, in such cases, it is clarified that explanation B of section 16(2), the registered person, that is me, the dealer, can be considered to have received the goods at the time of such handing over by the supplier to the transporter. In short, receipt has happened at the supplier's factory gate. The same principle applicable in respect of supply of other goods also. So even though this question was asked with respect to vehicles, it says same rule applies for any other goods where contract between the supplier and recipient is an X works contract. Thus, if goods are found to have been diverted, now this is again interesting. So firstly, the receipt has happened at the supplier's factory gate. Now, what if the goods are found to be diverted for non-business purpose at any stage, either before physically receiving the goods at the business premises or afterwards? So it can happen in any scenario that after getting the goods, I have diverted it. In such cases, just 1 second, students, just give me a second. Okay. So now the question is, what will happen if the goods have been diverted, either on the route, that is before they reach my dealer's location, or even after reaching, if they are diverted? The answer is simple. The basic requirement of ITC is goods should be used in the course of business. Now, if the goods are diverted, or like we know that they have been lost, stolen, so anyways, the condition of 16.1 is not met. If they are lost, stolen, then anyway 17.5 will ask you to reverse. So in these cases, If it is diverted, not brought to business, anyway 61 condition is not satisfied, ITC not allowed. If after bringing they are stolen, destroyed, written off, or given by way of gift or free samples, anyways you fall in 17.5H. So again, ITC is not applicable. Or even if you have taken, you will have to reverse it. So this is what is the particular point relating to reversal of ITC. Now coming to next point, time limit for issuing tax invoice specified in cases where recipient is required to issue invoice, Rule 47A. Now what is this point? Now 47A was inserted by notification number this dated 8th of October with effect from 1st November 24. Now what is this point? So let us first understand what we are talking about. So we are talking about the time limit for issuing invoice specified in cases where recipient is required to issue invoice. Now the question is, when is the recipient required to issue the invoice? The answer is in case of RCM, that also where the supplier is unregistered. So take example of any RCM. Let us simple example of GTA. My supplier, which is the GTA, is a normal truck wala, chota sa truck wala, not taken registration under GST. Now I have to pay tax under RC. Now the law says that wherever supplier is unregistered, then I am paying RCM plus I am also required to raise invoice. This invoice is in common parlance called as self invoice, where I raise invoice on myself. Now this is provided under section 31(3)(f), which provides that the registered person, that is the recipient, who is liable to pay tax under 9394, that is under RCM, shall issue an invoice in respect of good service or both received by him from the supplier who is not registered. So where I have purchased something from a supplier who is unregistered, point number one. Point number two, this transaction is notified under 93 or 94 to be a RCM transaction. When both these conditions are satisfied, then I'm going to pay tax under RCM. Plus, since my supplier is unregistered, I also have to raise invoice on myself. That is why we call it as self-invoice. Now, this section was amended by Finance Act 24 with effect from this date so as to incorporate enabling provision for prescribing the time period for issuance of invoice. Now, what was the point? This section did not have a time limit given within which the invoice should be issued. Now you'll say, sir, why or how? So if you see the section where the supplier has to pay tax under forward charge and the supplier has to issue invoice. So for supplier issuing invoice, there is a time limit. We all know in case of service, it is 30 days. And in case of banking insurance, it is 45 days. So in normal cases, that is forward charge cases, for supply of services, we have studied or we are till studying the time limit of 30 days. So supplier has 30 days to issue the invoice. However, there was no such time limit where the recipient was raising a self invoice for RCM transaction. There was no timeline given. Now in this case, 31(3)(f) was amended to bring in this timeline. This amendment was not applicable for your previous exams, but it is applicable now. Now, what is this amendment? Now, the new amended section says, notwithstanding anything contained in 1 and 2, a registered person who is liable to pay tax under RCM shall, within a period as may be prescribed. So, nothing is given in the act as far as the period is concerned, but they say that it will be prescribed. So, you have to go to the rules. Shall issue an invoice in respect of such good services received by him from the supplier who is not registered. So thus now invoice is to be issued by the recipient within some prescribed time. Consequently, the time limit for issuance of invoice in case of RCM has been prescribed. Now, how it has been prescribed? By issuing a new rule 47A. So that is what is the amendment. Now, what does this new rule 47A says? 47A provides that where invoice referred to in 46 is required to be issued under clause F of 3 of 31, that is self-invoice, by a registered person liable to pay tax under RCM, he shall issue the said invoice within a period of 30 days from the date of receipt of goods or service as the case may be. So now similar to the forward charge transaction, even under reverse charge of services, they have kept the time limit for issuance of invoice within 30 days of receiving the goods service. Thus, invoice has to be issued within the period of 30 days from the date of receiving the goods service, which is covered under RCM. And importantly, your supplier is unregistered. Next, generation of unique enrollment number under 138.3. Now, what does 138 deals with? So we all know 138 section is dealing with e-waybill. So rule, sorry, not section. Section is 68, rule is 138. Both are dealing with e-waybill. Now, what is it? Fourth proviso has been inserted in this rule. White amendment made from this date. The same has become effective from this date. What does the newly inserted fourth proviso says? Following person required to generate e-waybill shall submit the details electronically on the common portal in the prescribed form, and upon validation of the details so furnished, a unique enrollment number shall be generated. Now, what is this point? So, this point is a specific amendment made to enable unregistered persons to also generate e-waybill. Now, interestingly, the law has provided this. Law has not barred or kept a condition that only registered person can generate e-waybill. But the problem is on portal, you will find that there is a login which is given to a registered person. Registered person logs into his portal in his account and does all the requirement of GST, filing returns, everything. Similarly, e-waybill. But when an unregistered person has to do something, there was a challenge. So to enable them, this particular amendment is included, which says that an unregistered person making interstate supply of handicraft goods exempted from obtaining registration. So why this person is given this facility? Because this person is specifically excluded under the GST law from taking a registration and required to generate e-waybill. So he is not required to take registration, but at the same time, he's required to generate bill. Similarly, an unregistered person opting to generate e-waybill. So both, where you are compulsorily required or you are opting to generate e-waybill, what it says, then they shall generate the e-waybill and they shall submit electronically the details on the common portal in the prescribed form. And upon validation of the details so furnished, a unique enrollment number shall be generated and communicated. So this unique enrollment number will act as your e-waybill. So this is what is the amendment. Now we'll take our 15 minutes break, and post break we'll complete this, and in whatever time balance we'll go to few RTP questions just for the revision. Fine. So let us take a break of 15 minutes. Let us continue. Now, we have a new section introduced in the Act 74A, which is introduced with effect from 1st of November 24, and it is introduced by the Finance Act 2024. What it says, it provides for determination of tax which is not paid or short paid or erroneously refunded or credit input tax rate wrongly utilized for any reasons pertaining to financial year 24-25 onwards. So if you all know, there is already a section 73 and another section 74, both dealing with issuance of invoice and recovery of amount which is either not paid, short paid, erroneously refunded, or ITC wrongly awaiting utilized. Now, 73 was dealing for non-fraud cases, 74 dealing for fraud cases. Now, both these sections have now been merged into a one common section 74A. This common section 74A deals with both the scenarios of fraud and non-fraud cases in one section. And now it says that for all cases where the demand is for financial year 24-25 onwards, irrespective of whether the charges are of fraud or not, there will be one common section. So 74A will be used. Yes, definitely within 74A, the penalty which is leviable differs for fraud and non-fraud cases, but now there is a common section. Now, consequently, now wherever different sections have been referring to notice sections, it was equally important to incorporate this change. So this change has been brought in Rule 88B. What does 88B say? Where supplies made during a tax period are declared by the person in the returns for the said period, said return is furnished after the due date in accordance with provision 39, except where such return is furnished after commencement of proceeding under 73, 74, 74A in respect of said period, the interest on tax payable in respect of such supply shall be calculated on the portion of tax which is paid by debiting the electronic cash ledger. So in short, wherever, now this is the provision of 88B, we all know that you have to pay tax only on the cash portion. That is the amount which you are paying using the electronic cash ledger. That is on the net liability, provided the proceedings under 73, 74 has not been started and you are paying the tax you mote. Similarly here, 74A has been added because now from 24-25, there will be no 73, 74. So the action is taken under 74A. So that is what is the amendment. So nothing very significant. They have just included the reference for 74A. Now, the topic on returns. Now you have a return GSTR 7. There is a due date. Now GSTR 7 is relating to TDS. What it says, Erstwhile 39.3 provides that every registered person required to deduct TDS under the provisions of 51 shall furnish written in the prescribed form, which is 7, and the manner electronically for the month when such deductions has been made within 10 days after the end of such month. However, 39.3 was substituted by Finance Act 2024 with effect from this date so as to mandate that electronic furnishing of return for each month by the registered person who is required to deduct the TDS, irrespective of whether deduction has been made in the said month or not. It empowered the government to prescribe rules, the form, manner, etc. Therefore, earlier filing of monthly GSTR was linked to calendar month in which tax has been deducted. Fine. However, amended section 39.3 mandates filing GSTR for each month, irrespective of whether there is any deduction or not. So even nil return has to be filed. Further, new section provides that the time within which 7 is to be filed shall also be prescribed by rules. Consequently, simultaneously with effect from 1/11/24, Rule 66(1) has been amended to prescribe the time limit within which 7 can be filed. Now, what is this amended provision? So, amended 39.3 provides as follows. Every registered person who is required to deduct tax at source under section 51 shall electronic furnish a return for every calendar month of the deduction made during the month in such form and manner within such time may be prescribed, provided that Such stature person shall furnish a return for every calendar month, whether or not deduction has been made during the said month. Now, what is the amended rule 66(1)? It says that every registered person required to deduct TDS under 51 shall furnish a return in 7 on or before the 10th day of the next month. So this is what are the amendments, not very significant impact creating, but more clarificatory. Further reference of section 74A added in rule 88D, prescribing the manner of dealing with difference in ITC in form GSR 2B versus 3B. So we all know that now if there is a difference between GSTR 2B versus 3B. So what is appearing in 2B and what credit you are taking in 3B. For that, rule 88D applies, and rule 88D provides a system-based intimation to be sent to the taxpayer to give explanation about why there is a difference so that a proper action should be taken. Now, what is the amendment? Where amount specified in the intimation in sub-rule 1 remains to be paid within the period specified, and where no explanation is furnished by the registered person in default, or where the explanation or reason furnished by such person is not found to be acceptable, the said amount shall be liable to be demanded in accordance with 73, 74, and now 74A. So again, this is like the previous amendment. Just a reference for 74A, which was missing, has been added. Same thing here. The reference of section 74A is added in rule 96B, which deals with the recovery of refund of unutilized input tax rate or IGST on export of goods where export proceeds are not realized. Now, again, we know that under refund provisions, this new rule 96B says that whatever refund you have got, you will have to return the refund back if you are not able to realize the export proceeds in convertible foreign exchange. So for this, obviously, the recovery will be by issuing a notice under 73, 74. So now the reference of 74A has been added. So what it says, consequently, reference of 74A has been added in this rule 96B1 as per proviso 216.3. Registered person making zero rated supply of goods without payment of tax shall, in case of non-realization of sale proceeds, be liable to deposit the refund so received under section 16.3 along with interest under section 50 within 30 days after the expiry of time limit given under FEMA for receipt of the foreign exchange. 96B prescribe the manner in relation to this. It provides that the proceed of exports of goods must be realized within the period allowed under FEMA. In case of non-realization or part realization, the refund would be subjected to recovery with interest. Next, now what is the amendment? Now, with relation to this, for recovery, the law provides for a mechanism. The mechanism is issuing notice. The notice under 73, 74, or now 74A, as the case may be, shall be issued by the officer for initiating this recovery. Now, coming to the second part relating to customs, what it says, this rule, that is customs import of goods at concessional rate of duty for some specific end use. This rule has some amendment. The amendment is again clarificatory. The definition of quarter has been inserted. Now we all know what is quarter. It is a period of 3 months, 3 calendar months, ending on the last day of March or June or September or December. Further, 6 to 10 has been amended to provide the following. The salient features of the rules are discussed here under importer to maintain records. Now see, whenever you want to import goods, that also without paying import duty, on what criteria that you are going to use these goods for a particular end use. So this end use has to be proven. How? First, you have to maintain record. First of what? Goods imported, then the receipt of the imported goods in the premises, then the quantity of goods consumed for that purpose, that is the end use for which the exemption is there, quantity of goods sent to job worker, and the nature of job work carried out, again the goods received back from job worker, the quantity of goods re-exported if any under Rule 10, and so on. Now the importer shall submit a quarterly statement on the common portal. So that is why the amendment of definition of quarter was there, so that now they are imposing upon you the requirement that for this you have to provide a quarterly statement. Now procedure for allowing imported goods for job work. So the importer shall maintain a record of the goods sent for job work during the month and mention the same in the quarterly statement. So where goods are sent to job work, to job worker, now the job worker also has to ensure that the goods are being processed, and the importer has to provide the details of the job work, related work, again in the quarterly statement. Further, the maximum period for which the goods can be sent to the job worker shall be 1 year. So similar to GST, here also, if the goods are sent to job worker, they should be brought back within 1 year. Again, similar provision or amendment is in Rule 8, that where goods are transferred from one unit to another, again, the reporting has to be done in the quarterly statement referred to in Rule 6. And finally, procedure for supplying imported goods for the end use. Again, this has to be reported in the quarterly statement so that the government or the department can at their end do the matching. Further, if the goods are re-exported or they are cleared and they are unutilized because they are unutilized or defective, then again the importer who has availed the benefit of notification shall use the imported goods in accordance with the conditions mentioned in the notification within the period and with respect to unutilized or defective goods. So the importer shall have the option to either re-export or the clear the same for home consumption within the set period. So either you should use it for the end use, and if they are defective, you are given option, you can resend it, that send it back to the country from where it had come, or you can clear it for home consumption within the prescribed period and within 1 year from the date of import when the time period is not specified in the notification. So what is the main point? First, it was only within the prescribed period, and if let us say no period is prescribed, then an upper limit of 1 year is given. The said 1 year can be further extended by the commissioner for a period not exceeding 3 months. The re-export of the unutilized or defective goods referred to above shall be recorded by the importer in the quarterly statement. So again, this has to be reported and using the same quarterly statement. So basically, these small changes are done where now they have provided for making this quarterly statement. Now, within FTP, the amendment is relating to trade facilitation measures introduced with an option available to the central government for consultation with the stakeholders to seek their view and also provide a mechanism on best endeavor basis to inform reasons for not accepting views concerning the formulation or amendment of policy. So basically what it is, till now, all the foreign trade policy matters were decided solely by the government or their appointed commissions and bodies. Now, as a trade facilitation measure, the government has introduced the consultation with stakeholders to seek their views and also provide a mechanism so that they can inform in case they are having any issues, and also government is required to inform back if whatever views or suggestions you had given are not acceptable to government. So now you are given the power or given the option to inform or give your inputs on any foreign trade policy matters. And if government is not accepting, it will have to revert back and inform you the reason for not doing that. So consultation with stakeholders, the government in the course of formulating the FTP and as and when it considers it reasonable may seek views, suggestions, comments, feedback from the stakeholders, including importer, exporter, industry experts with regard to formulation, incorporation of specific provisions and amendments in FTP, and to the extent possible, 30 days time period may be provided to such stakeholders for submitting their views or suggestions. The government reserves the right to suo motu formulate, amend, or incorporate any specific provisions without seeking views, suggestion, comments from the stakeholders. Further, soliciting of views, suggestion, comments, or feedback. If the views, suggestion, comments, feedbacks are not incorporated, the government may, to the extent possible, and if it deems reasonable to do so, provide to the stakeholders, including the importer, exporter, industry experts, the reasons for not considering their view. So first, the government will be seeking your views. You have to give the views within 30 days. Second, in case your views are not incorporated, the government will have to give you the reason. However, this has an exception where the government is not obligated to disclose the reasons for not incorporating your view when that has the potential to or will adversely affect trade relations with any foreign country. So why I cannot inform you the reason for rejecting your view? Because if I accepted your view, it could have led to some adverse effect on my trade relation with a foreign country, because whatever you suggested and I denied has a direct bearing on one of the foreign countries' trade. Second, it would adversely affect food, economic, or national security of India. So where incorporating your view can lead to this, then I need not accept it and I need not give the reason. For example, if you remember, sometime back the government had put a restriction on export of a particular type of rice. Why? Because within India, the production of rice and the available rice which was available as our stock was depleted. Now, if in this case the government did not bring restriction on export and the rice got exported, because there was also at the same time parallelly a huge deficiency in the foreign market owing to all the Russian uh, sanctions and all those war related issues. So at that time, the government intentfully brought in this restriction so that tomorrow there is no food scarcity in India. Right? Let us say your suggestions are sought and you give a suggestion that this should be removed, the restriction should not be there, etc. Government is not bound to reply back or give you the reason for doing what they have done or for not doing what you're asking, because it could adversely affect the situation of food scarcity. Then, if it is in conflict with government policies, strategic programs, international obligations, or commitments. Next, if it addresses matters unrelated to trade or serve narrow private or special interests to the detriment of or contrary to the broader public interest. So where your suggestions are such that they are very much related to you or your industry, means your suggestions are such that which are intended for your personal benefit and they could be detrimental to the country at large or detrimental to public interests. Again, government is not obligated to give you any reason. Further, if it would require the disclosure of any confidential or classified information. Nothing shall confer legal right whatsoever on any person to seek reason for his view, comments, opinion, feedback not being incorporated. So above are only recommendatory. Whether government does or not, you are not given any legal right. You cannot file a rate. You cannot file any type of complaint anywhere. Extension of support under RODTP. So road tap we call it commonly. So what it says, the road tap scheme benefit will be available for export of products manufactured from advance authorizations or from SEZ and from EOU with effect from 1/6/2025. So the support under road tap for export of products manufactured by DTA unit is available till this date, and it will be available where the exports of products are manufactured from advance authorization units, SEZ, etc., with effect from this date. So for them, the road tap benefit scheme has started, and for DTA units, it is ending on 30th of September 2025. So these are some of the amendments. Now let me take you to some important questions in the RTP. This would help you in a broad revision. Or before that, if any question you have, you want me to address your question, you can ask me. So Leela, if any of your question is pending or had raised two questions, one of IC sales, if that is available, you can show me. I can, if possible, because here I'm not having the RTP. I checked in my database. So with me, RTP is not available. So Leela, you have any particular question
Sir, MCQ number 5.
in this RTP, in this paper, what I am using?
Yes, sir. Yes,
Okay, fifth one now. This one?
yes, sir.
Excellent. Let us do one thing. Can you help me reading this case scenario better? Can you read for me, please?
Okay, sir. BCM Limited, a public limited company registered in Uttar Pradesh, is engaged in manufacturing of product A, product B, product C. Product A is exempt under GST, while product B and product C are taxable under GST. Moreover, company is engaged in making cross-border supplies of taxable product D, produced domestically from local manufacturers. Further, it is engaged in supplying consultancy services. Following information is provided by the company for the month of January. The company manufactured product A and exported 1,000 units of same worth 8 lakhs to Germany. The company supplied product C of value of 35 lakhs to Dhriti Limited, Noida, Uttar Pradesh, including product C worth 10 lakhs supplied to SEZ unit of Dhriti Limited in Noida. The company imported specialized heavy textile machinery from China on 2nd January, with CIF value 55 lakhs and FOB value of 53 lakhs. It sold the said machinery for 62 lakhs in the high sea to Swadeshi Textiles Delhi. While clearing the goods for home consumption, Swadeshi Textiles filed bill of entry for 63 lakhs. After clearing the machinery for home consumption, Swadeshi Corporation sold the machinery to Gargi Industries for 70 lakhs.
Okay, so I think your question is exclusively dealing with this point only because I think the other points are relating to other products, correct?
Yes, sir.
So we'll now
Yes.
focus only on this point and we can go to that MCQ where you have a challenge. So what it says, the company has imported some machinery from China on this date with the CIF value 55 lakhs. So see, this is the value at which the original importer has imported, right?
Yes.
53 lakhs is the FOB, CIF is 55, fine. It sold the machinery for 62 in the high seas to another person. So now this is the second person who has bought from the original importer the machinery. Now, while clearing the goods for home consumption, this second person who purchased from the original importer filed bill of entry for 63 lakhs. After clearing the machinery, Swadeshi Corporation sold the machinery to Gargi Industry for 70 lakhs. So now there are different values given. Now, your question is MCQ number 5. What it says, assessable value of machinery cleared for home consumption by Swadeshi Textile is. Now see, it cannot be the first value 55. Why? Because it was, if the original importer would have cleared, it would have been 55, right?
Yes.
Also, it cannot be 70 lakhs. Why? Because 70 lakhs is the future price at which it is sold in India. Again, that cannot be the value. So now the only conflict is between 63 and 62. Now, firstly, do you have any issue with this particular? You have any other opinion in whatever we have discussed till now?
No, sir. Clear.
So now what is your challenge? So now what is your doubt over here, beta?
I think the value should be 62 lakhs. That is transaction value at the high seas.
Okay. So your confusion is why it is 63 and not 62, correct?
Yes, sir. Yes.
So simple, beta. See, I always say, whenever there is a doubt, a challenge, a question, the best thing is you should go back to module, right? So let us just read from module, correct? I just don't remember where high sea sales is covered in this, but let me just search. Check if I can find it out here. Let us recapitulate. Do you recall, but on which page we have this provision?
No, sir.
This is, sorry, I opened the wrong chapter. This is not on valuation. Sorry, it is on classification. Okay. Now here I think we'll find the IC sale related provision. These are the rules. FFP, transportation, insurance, tax, services, residual. Here also specifically given. No, but at least I'm not able to locate it here. Okay. Let me come back to your question. So now basically your question is, or your point is, why they have taken 63 lakhs and not 62 lakhs, correct?
Yes, sir.
I'm not getting the provisions from. Now see, here they are saying that bill of entry was filed for 63 lakhs. See here, they have not given the reason why the bill of entry is filed for 63 lakhs. Because you have purchased, the second purchaser has purchased it for 62 lakhs, there is no doubt. But when the bill of entry is filed, the person filed bill of entry for 63 lakhs. But that could be maybe because of exchange rate fluctuation, no? Because when you are filing the bill of entry, you have to take the exchange rate of that date. See, definitely the value which is given over here in rupees, original value would not have been in rupees, it would have been in some foreign currency, right? Now the law says when you file the bill of entry, you have to take that date's foreign currency exchange rate. So I think the value is same, what is there for 62 lakhs. Why it has become 63 lakhs? Only because of, I think, foreign exchange. So that is not given over here why they have taken 63 lakhs in the bill of entry. Because otherwise, I could not locate the provision. Otherwise, we would have read from there. The law simply says you have to take the last value. The last value in the high C sales has to be taken. Now, the last value in the high C sales is 62 lakhs only. Correct? But when these goods are being cleared by filing bill of entry, at that time, the importer himself, the new importer himself has filed bill of entry for 63 lakhs. So, beta, there is a possibility that there could be some valuation difference. Now, the reason over here is not mentioned why it is 63. So, I'm presuming it may be because of some exchange rate fluctuation reason and hence 63 lakhs bill of entry is filed. Right, beta? But what you are saying is right. In principle, it is 62. But since he has filed bill of entry for 63, ultimately assessment is done on the basis of bill of entry. And since anyways the value you have considered in bill of entry is higher, the law or the officer will not go back to take the lower value. So I believe here the reason, at least I'm not getting why they have taken 63, but only reason which I can comprehend is maybe because of exchange rate fluctuation. Fine, beta?
Okay, sir. Okay.
Yeah. So in this only you had the other question also. You had raised one more question, beta. Is that
Yes,
question in this
yes, sir. Question number 20, sir.
20? Let me take up that question, what it is. Okay. Can you please read the question, beta? Leela, please read the question.
Yes, sir. Blue Bluecrest Machinery Company, a manufacturing firm in India, imported a machine from UK supplier in May. FOB value of the machine was 10 lakh UK pound. Air freight incurred was 3000 UK pound. Further, the buyer was required to pay license fee in UK is 400 UK pound. Moreover, the firm had paid a buying commission of 20,000 rupees in India. In this regard, following additional information is also provided. Date of bill of entry was 20th May and the rate of exchange notified by CBIC on this date was 99 rupees per 1 pound. Rate of basic custom duty was 7.5%. Date of arrival of the aircraft was 25th May and the rate of exchange notified by CBIC on this date was 98.5 per pound. Rate of basic custom duty was 10%. Integrated tax was 12%. Insurance premium details were not available. You are required to compute the total customs duty and integrated tax payable on the importation of machine. You may take suitable assumptions.
Okay. So now you are saying the challenge is in the valuation, you are saying, right? So
Yes,
1 second. Let me check what they have done so that I can understand your query. So you're saying in the answer they have considered, you had mentioned what the buying commission, right?
yes, buying commission they presented after customs FOB.
But beta, anyways, buying commission is not includable, na? So there is no
Yes,
question of if it is not includable, then see, your question was that whether it is included in custom FOB. So your issue is whether it is includable or not. That is the query.
no, sir. Where we have to present before customs FOB or after customs FOB.
So but if it is not includable, then I think this question will not arise, no? But I
Okay.
understand if your question is if it is includable, then where? Then my answer is same. What I gave at the start, na? That it is to be includable before, because customs FOB is the final value, and on that you have to only add two things. One is the freight and one is the insurance as per the provisions given in Rule 10.2. Correct? Now
Yes.
here, since buying commission is not applicable, that is why I think they would have given separately below. Let me just read. Buying commission not included. Okay, that's it. It is given only this much. So had the buying commission being includable, it should have been included before only, better, before deriving customs FOB.
Okay.
So that much only was your query, right?
Yes, yes, sir.
Okay, perfect. Any other query you have in this
No,
entire sheet? So all other questions that you have solved are matching with your understanding.
yes, sir.
So there is no other issue that you have, right?
Yes, sir. Firstly, I added to license fee after customs FOB.
No, no, no. But that's what I'm saying. All 10-1 adjustments, rule 10-1 adjustments. After making all those adjustments, you will get custom FOB. One second, let us go to the valuation. I think it is written there clearly. Again, I should be able to just locate it. But I remember very clearly that in valuation provisions itself, they have mentioned. Uh, see, it is very difficult to locate things. Uh, uh, um, Somewhere here, if I'm not wrong, it was mentioned that customs FOB will be counted after considering all the 10-1 adjustments. Somewhere here, if I'm not wrong, explanation to 12, definition of the term use of obligation, treatment of transshipment charges. It's going there. Again, I'm not able to locate it better in the whole notes, but it is clarified somewhere that customs FOB, which we consider, I think it should be clarified here that customs FOB that we consider will be considered after making all the adjustments of 10-1. Somewhere it is given here only. Space 10-1. By commission. Okay. I think activities undertaken by the buyer on the or account other than those mentioned, the cost of such activities. But somewhere here only, but I remember reading because they have clarified that after making all adjustments of Rule 10.1, what you get is the customs FOB value beta. Now just maybe I'm trying to read very fast, so I'm not able to locate that. But in these interpretative notes, it is given beta. So maybe you just go through them silently, patiently. I'm sure you'll find it here that for determining this, because see, this will affect us, this point of our question of your affects us when we are finding the freight, because that is based on some percentage, correct?
Yes, sir.
So mainly, I think this point will be relevant when we are determining the freight part. And I remember this reading very clearly, that you have to consider this in customs FOB. Okay, but I think right now, maybe in the haste of finding it out fast, you may not get it. But I'll request that you please read this patiently. I'm sure you will get this better here. I remember it reading it some time back here only.
Okay, sir.
Use of importation, explanation. Somewhere here only in this one of these notes only it is there. We'll have to do this patiently, beta. Fine, anyways, any further questions, beta?
No, sir.
Okay. And I think since we have completed everything, so I think we can conclude the session here. Is ma'am there? So if she wants to add something, she can add. No? Manish ji, then I think we can conclude the session here. Manish ji. Okay, chalo. Anyways, so thank you very much, students. We conclude our session here. We have completed all the statutory updates. Thank you, Leela, for all the inputs and also for making this interactive by raising your queries. So thank you all. Kindly study well, prepare well for your exams. This is a very important, I can say, stage in your life. So give it your best. And yes, things are not easy because you are giving one of the biggest exams of the country. So it will require efforts. Give it the due efforts, the due time required, and I'm sure you'll come out with flying colors. So best of luck for your exams and your preparations, and even for your future endeavors in the profession. Thank you. Thank you very much.
Thank you, sir.
Thank you. Yes, sir. Done, sir. Good night. Good night, Manish. Good night.